Why do some people build wealth while others stay stuck paycheck to paycheck? The answer isn't luck, it's habits. Let's break down the money habit.
90% of Americans totally financially trapped. We're going to expose the silent, everyday habits that are quietly draining your bank account. And we'll walk through the exact blueprint you need to finally escape that exhausting paycheck-to-paycheck cycle. Okay, let's just dive right in. Because what we're about to uncover goes against almost everything you were taught growing up. Picture this. You wake up tomorrow and there is no paycheck coming in. Zero. How long could you actually survive? A week? Maybe a month? Or would your entire financial life just start falling apart almost instantly? Here's the crazy reality behind closed doors. Millions of Americans are pulling in six-figure salaries. They're driving luxury cars, living in these gorgeous homes, and yet they are absolutely drowning in debt and completely stressed about money. So why do some people build massive wealth while others hustle for decades and still barely scrape by? Well, spoiler alert, it has almost nothing to do with how smart or how lucky you are.
Let's start with Section 1, the biggest money lie. It's all about income versus wealth. Since we were kids, we've all been sold this exact same formula, right? Go to school, get good grades, land a stable job, work really hard, and boom, you'll be financially secure. But millions of people followed that advice to the letter and still struggle. I mean, think about it. If working harder automatically made you rich, then construction workers, nurses, and teachers would all be multimillionaires. We're taught that a high salary guarantees security. Actually, scratch that. Income alone doesn't create wealth. A person pulling in 60 grand a year who consistently invests can literally end up wealthier than someone making 250 grand who just burns through every single dollar they earn. Money isn't just earned, it's managed. And management? That's where so many hardworking people miss the mark. Moving on to Section 2, traps keeping you broke. Let's look at the silent wealth killers. So this is lifestyle inflation in action. Imagine you finally get that promotion or that raise at work. You'd expect your financial life to get a little easier, right? But instead, what happens? You finance a newer car. You upgrade to a nicer apartment. You start taking pricier vacations. And within a few months, your bank account looks exactly the same as it did before. Every time your income bumps up, your expenses rise right alongside it to match. Instead of buying assets, people just buy bigger monthly payments. They might look rich, but they definitely aren't building actual wealth.
But the truly wealthy, they look at this entirely differently. They don't see a salary bump as a green light to go on a spending spree. They view it as a massive opportunity to invest more. Because true wealth isn't measured by how much you spend, it's measured by how much you keep. It is 100% about what stays with you and goes to work for you. And that brings us to a trap so many of us fall into at some point: credit cards. Now, the average American is carrying over $6,000 in credit card debt. Look, credit cards aren't inherently evil. If you use them right, you get rewards, you get purchase protection, but the trap snaps shut the second you confuse borrowing with earning. Imagine swiping for a $2,000 TV with money you don't actually have in the bank. In the moment, it feels amazing, but a few weeks later, the bill shows up. Then the interest kicks in. Suddenly, that $2,000 purchase balloons into something way, way more expensive. When you repeat that habit dozens of times over a few years, you are literally trading tomorrow's freedom for today's comfort. This trade-off introduces a concept that the wealthy deeply understand, but almost everyone else ignores: opportunity cost. Every single dollar you spend today on a fleeting comfort comes with an opportunity cost. It's not just the money you spent, it's the potential gain you totally lost out on. That same money spent on the TV, it could have been invested, growing quietly year after year through the absolute magic of compound growth. Small financial decisions, they don't stay small, they multiply.
Which leads us to Section 3, the wealth creation mindset. How to actually think like the rich. To beat this whole instant gratification trap, we have to look inward and tackle the invisible enemy, our own psychology. On one hand, you have the way most people operate, trading time for money. You work an hour, you get paid for an hour. Fair enough. But there are only 24 hours in a day. So no matter how insanely hard you work, your income has a strict ceiling if it relies entirely on your physical time. But on the flip side, you have the wealthy mindset. They don't just rely on earned income. They build assets that keep producing cash long after the actual work is done. They make their money work for them.
So what does that look like in the real world? It looks like owning these kinds of vehicles: stocks, index funds, real estate, businesses, royalties. These assets don't just sit there gathering dust, they work. Even while you're fast asleep, the wealthiest people aren't waking up asking, "How much money did I make today?" No, they're asking, "What did I buy today that's going to make me money tomorrow?" Financial freedom comes from owning things that pay you. Yet so many people are terrified of buying assets. They think investing is just for millionaires, or they're paralyzed by the fear of losing money. So they do nothing. But there is a massive, severe cost to doing nothing. If you just park your money in a regular old savings account, inflation is in there quietly eating away your purchasing power every single year. The number on your screen might look exactly the same, but what that money can actually buy shrinks. Fear keeps people out, for sure, but historically, the market heavily rewards the disciplined, patient investors over the folks who just sit on the sidelines. And to get there, we've got to clear a huge psychological hurdle. We need to stop trying to look rich. I mean, why do people finance luxury cars they can barely afford? Or buy designer clothes while carrying thousands in revolving debt? Status. They are spending money to impress people who aren't even paying their bills. The deep irony here is that the truly wealthy often look surprisingly ordinary. Looking rich costs money. Being rich creates freedom. Their confidence comes from having actual financial security, not from fishing for public approval. So, what's the bridge? How do you get from where you are right now to that true financial security? It is the ultimate superpower: consistency. Not perfection, consistency. Think of it like planting a tiny tree today. For months, it barely looks like it's growing at all. But years later, it provides shade, fruit, strength. Money works the exact same way. Wealthy people repeat small, smart decisions over and over. They save first. They invest regularly. The progress feels totally invisible at first, but eventually, the growth becomes impossible to ignore.
All right, Section 4, the 5-step escape plan. Let's map out a highly practical blueprint.
Here's your exact 5-step blueprint to break free. And no, you don't need to be a stock market whiz or have a massive income to pull this off. Step 1, spend less than you earn. If money leaves faster than it enters, wealth is literally impossible. Step 2, build an emergency fund of 3 to 6 months of expenses just so life's curveballs don't force you straight back into debt. Step 3, eliminate that high-interest credit card debt so your money goes to work for you, not the bank. Step 4, invest consistently. Stop waiting for the perfect time to jump in. And Step 5, increase your income. Learn new skills, negotiate that raise, or start a side hustle. The secret to making these steps actually work: execution and delayed gratification. You aren't sacrificing forever, you're just delaying a little short-term pleasure for a lifetime of long-term freedom. Finally, Section 5, true wealth is freedom. It's time we redefine what being rich actually means. Because the goal of all this saving and investing isn't just to accumulate a giant Scrooge McDuck pile of cash. Being rich actually means having choices. The choice to quit a job you absolutely hate.
the choice to spend Tuesday afternoon with your family, the choice to travel without sweating over every single dollar, the choice to retire on your own terms. Money isn't the goal here. Freedom is the goal. Money is simply the tool we use to create it.
Every single day, your habits are casting a vote for your future. So I want to leave you with this final provocative thought to take away from our time together. Take a hard look at your daily decisions. Are you building a future where your money works for you? Are you building a future where you work for money forever? Remember, your financial future isn't decided by where you started. It is completely decided by what you choose to do next.
Remember, wealth isn't built overnight. It's built one smart decision at a time. If you found this video helpful, hit the like button, subscribe for more practical finance tips, and I'll see you in the next video.